What if the policy that was expected to hurt the economy, Trump's tariffs, actually led to a massive $3 trillion investment in the US? Detroit was once the center of the American auto industry. But after Bill Clinton signed the North American Free Trade Agreement, NAFTA, many companies moved their factories to Mexico for cheaper labor or to Canada to avoid unions. While this helped big companies like General Motors, it hurt American workers, especially in places like Michigan and Ohio. For years, the media and experts warned that Trump's tariffs would cause inflation, job losses, and a stock market crash. Some even thought he wanted the economy to struggle so the Federal Reserve would lower interest rates or so his allies could buy stocks at lower prices. At first, these fears seemed true. The stock market dipped, Bitcoin prices dropped, and people blamed tariffs. But in reality, Trump's tariffs led to over $3 trillion in investments, boosting American factories, jobs, and supply chains. This economic shift wasn't just luck, it was part of a bigger plan to bring manufacturing back to the US. Instead of harming the economy, Trump's approach helped rebuild it, proving that what many saw as risky was actually a major success. Let me discuss in the video. Trump's slogan, "Make America Great Again," refers to a time before 1913 when the US relied on tariffs instead of income tax. Back then, America was financially strong, with so much extra money that commissions had to decide how to spend it. This history influenced Trump's tariff policy, aiming to make the US more self-sufficient. To understand Trump's tariffs, we need to look back at history. After World War II, the US lowered its tariffs to help rebuild Europe, Japan, and other countries. This was part of the Marshall Plan. However, the problem was that these trade policies were never updated. Many countries kept high tariffs and trade restrictions, which made it harder for American businesses to compete. By the 2000s, the US had some of the world's lowest tariff rates, around 3 to 4%, while places like India and the European Union had much higher ones. Leaders from both political parties allowed this imbalance to continue, leading to the loss of American manufacturing jobs and economic struggles in industrial areas. This even affected life expectancy, with a 7-year difference between people with and without a college degree. Because of this, Trump pushed for trade policies that would bring jobs back, something he had talked about since the 1980s. By the time Trump became president in 2016, America had already suffered from unfair trade practices for decades. He realized that the US, as the biggest consumer market, had power. Instead of accepting bad trade deals, he used tariffs as a tool to renegotiate better policies and encourage investment at home. Even though the media predicted disaster, his strategy led to a major economic recovery. Trump's tariffs created over 1 million new jobs and brought in huge foreign investments. The UAE committed $1.4 trillion over 10 years, Saudi Arabia pledged over $600 billion, and Apple announced a $500 billion investment over 4 years. Companies like OpenAI, Oracle, SoftBank, Siemens, Taiwan's TSMC, Johnson & Johnson, and Eli Lilly also invested hundreds of billions. Car makers like Honda and Hyundai followed suit. And all this happened within Trump's first 2 months in office. Beyond tariffs, history shows that staying invested in the market during tough times is important. Even with ups and downs during Trump's presidency, the S&P 500 grew nearly 50% from 2017 to 2020. In fact, long-term investors have always gained the most wealth, even when times seemed uncertain. The longest bull market in US history, from 2009 to 2020, saw the S&P 500 grow over 400%. A Fidelity study even found that the best-performing investment accounts belonged to people who either forgot about them or had passed away, proving that long-term investing works better than trying to time the market. The lesson here is that uncertainty should not lead to panic selling. When market fear is high, as Warren Buffett's advice, be fearful when others are greedy and be greedy when others are fearful. History proves that those who hold onto their investments during downturns benefit the most when the economy recovers. Despite media warnings about tariffs and market instability, those who stayed invested saw strong gains. If we summarize it, while many experts initially doubted Trump's tariff policies, they helped rebuild American industry and changed global trade. This highlights the importance of long-term investment strategies and economic resilience. Whether Trump's policies continue or not, their impact will be felt for years to come.